Hello, what's up traders? Today is another video in my YouTube channel, Sentinel Trades. Today I'm breaking out my strategy or my entry for today, 14 July 2026. As we know, I use IMT and order flow to execute my trades or get my logic of the price action that being created during the day. First of all, my entry model or my logic model is based on IMT, which is the volume profile. We have a range or swing high, swing low. We mark out the value area, which is 70% of the market profile. And we look for the price reject value area high or value area low, which is in this case, we have this value area high. We've got, and we look for confirmation as look as unfinished business, exhaustion or absorption, which is absorption is mainly or the most repeated scenarios in the price action or the auction of the markets. As you can see here, buyers are aggressively continuing and pushing the price higher and higher until we meet the value area high. So the value area low, which known as the best or the best price balance for buyers and sellers for both sides. So the price keeps rejecting high and rejecting low and play between it. It's called the 70% of the market, the daily market. So as we can see here, this is just an example. We will see a live trade, live example, which happened yesterday where I actually executed. So the value area high we have here, we look in the book map or footprint as we'll look for absorption or exhaustion or limit iceberg orders, which is the price cannot push higher and sellers stepping in to defend that area. And when we see an absorption or one of these scenarios, we execute our trade, take 1 to 3 hour or until another key level. Let's see in the live market. As you can see here, the trade was in London session, after London session, when we had from 240, I guess, 230 to this area. A balance range. We draw our volume profile. So as you can see, we have the value area low and value area high, and the price couldn't break it at the first time. As you can see, we had the failed auctions here, return to the value area, failed auction above and returned to value area, failed auction here and failed auction here. But this is the POC where the most money traded. But how we can know if the price is going to break down or up or down or up? By using the CVT cumulative volume delta, which is, you can see the divergence between the price action and the volume delta. Let me explain something. On a CDV, let me without opening the book map or the footprint, we can use a CVT to spot an absorption in the market. As you can see, we have price action like this. It's most likely like SMT as the traders know it, but with cumulative volume delta. And the cumulative volume delta So we have this cumulative volume delta, and this is the price action. When we see there is a divergence between the price action and the cumulative volume delta, like this, it means that we have an absorption. As you can see, we have aggressive sellers are trying to push the price lower. The volume of the sellers are low. There's aggression in selling. It took this low, but in the price action it didn't take this low, which is that all of that aggression is for nothing. They cannot push the price action or the price lower enough, so they get absorbed by buyers and without taking this protected high, and we go higher. As you can see here, let me show you the cumulative volume delta. As you can see here, the price is in accumulation but in downtrend. You see, but here buyers are still pushing the price up while the price is going down. So we have a divergence between this high and this high and this high and this high. When you spot absorption, you can confirm with whatever you want, heat map or footprint, or you can use this with this protected high. As you can see, you can execute here because you spotted the price action where it's going, where it's most likely to fail, the auction fail. So you can sell from here. Easy target to Asia low, which was here, and you get yourself 7.58 RR. So for resume, we have a range, balance range. We read the auction by the market profile. We set up our value area high, value area low, where the most likely the auction is doing, where is the action, the aggression, buyer aggression, and seller aggression. We spot divergence, which is called an absorption, that indicate absorption, and we execute and we target a principal low, or we follow the auction until the aggressive buyers stepping in, so all second absorptions, so we exit the trade. That was my logic for this trade, and I hope you find this well. Thank you guys.